Hello and welcome to this CNBC Africa special. I am Fifi Peters. Now for the next hour or so, we're going to be talking about shaping the future of long-term investing, infrastructure and development. This is one of the themes that will be tackled at the icy slopes of Davos this week. Now it's estimated that the global infrastructure backlog stands at around $1 trillion. And here in Africa, that number stands at around $100 billion, according to some figures from the African Development Bank. The problem is demand for infrastructure far outstrips supply. And we see this every day in terms of demand for housing, healthcare, education, and transport as a few examples. If we don't close the gap, we're going to find it very difficult as a country and a continent to achieve any form of inclusive economic growth. Joining me at the desk to tackle this issue are Tommy Strydom, who is the CEO of Inyatsi Construction, Sandile Hlophe, who is Africa Government and Public Sector Leader at EY, and Lizeka Machecha, who is the Divisional Executive of Infrastructure, Agro-Processing and Agriculture at the IDC. Ladies and gentlemen, or gentlemen and lady, thank you so much for your time. A very important issue that we're tackling here today, one that we've been speaking about for a long time, however. And Tommy, as a man on the ground in this space, I'm very interested to find out if the governments in the various geographies that you operate in have moved the needle when it comes to infrastructure development in the past 5 years or so.
Thanks, Fifi. Yes, definitely. There's definitely been a big change. They're talking more and more, all the governments and officials are starting to talk more and more about private-public partnerships, the PPPs as we know it, where we can work together with the private sector to bring in the funding. The problem, however, is that there is not always the skills available and the knowledge available. So we as private sector have to work together with the government to actually get these projects off the ground. But there's definitely been a huge change on the attitude especially of the government.
Well, this is a positive. And Lizeka, perhaps if I bring you in here as well, I mean, from a funding perspective, a lot of the companies in the space, particularly the small guys, come to the IDC in the hopes for funding and the like. But have you seen an uptick in interest in the infrastructure space, and have they translated into successful projects on the ground?
I think for the last 5 years, we've seen a huge improvement, as illustrated by Tim earlier on. I think perhaps renewable energy is one of those examples to use, where we've seen how the PPP has worked, how government has unlocked its fiscus through partnerships with private sector. However, if I were to bring it here home, I don't think there's been much significant increase post the renewable energy. And we could attribute this to other reasons, such as the lag in the economic growth, the challenges of government competing in terms of their delivery. But in the rest of the region, in fact, that's where we think growth is coming from. So from us as IDC, we're seeing a lot of, I don't necessarily want to say your lower, mainly your middle tier, upper tier companies, really now exploring opportunities outside South Africa. I think their sustainability rests on that, taking advantage. So obviously for IDC to partner with them, be it we come in early stage. And I think it's a different approach as well. What we see, what we do back here in South Africa doesn't necessarily mean it's the same, for example, in Mozambique. Therefore, you have to adopt a different approach. But we are there with partners, long-term partners, and as IDC, we're trying to be innovative in how we support them.
Sandile, I mean, both our panelists here are talking about an increase in particularly participation and commitment by the governments and so forth in the way of infrastructure development. And we see it with the budget because, I mean, the spending in the gross fixed capital formation increasing over the past 5 years. Yet for many, it seems like on the ground that it's not translating into tangible infrastructure development that they can pinpoint. Why do you think there's this potential disconnect?
Yeah, I mean, I think that's a good point. So we have seen lots of governments increase their allocation towards infrastructure, but I think it's been to certain subsectors of infrastructure. I think, as this guy said, a lot of it has gone in some countries to renewable energy. In other countries, it's focused more on roads. But also, I think what's been a challenge has been the ability to bring together capital to actually unlock a lot of those projects. Because most of the time, even though governments may put down a budget, that budget probably covers up to 30% of the total requirements, and then the balance of 70 needs to be then sort of borrowed through DFIs and through private sector. And I think the important thing then there is really having the enabling legislation that allows private sector to work with government in driving that, as seen in the PPP framework in South Africa. Looking at the rest of the continent, I think the evolving of PPP legislation has been somewhat slow in certain parts of the continent. And I think that's probably what also leads to a lag. And then if you look at the key infrastructure that most people, that's visible to most of us, such as roads and buildings, you find that that is visible to us, but where investment's gone to is mainly in water and electricity. And I think a lot of it's been driven through the UN Sustainable Development Goals, where there is still quietly quite a significant gap in terms of bridging that gap, particularly when it comes to water and electricity. So a lot of the infrastructure spend has gone into the almost like the invisible part of infrastructure that the average citizen doesn't quite see from that perspective.
All right, but then afterwards, which infrastructure development projects should we be accelerating? I mean, I've heard at the table a general consensus that renewable energy, roads and the like are the areas that garner the most interest right now from an investment point of view. But which projects, because there's a whole list, I mean, we've got the roads, as you mentioned, we've got education that also needs to be taken into account, we've got the areas of healthcare.
Yeah.
But which infrastructure projects should we be accelerating at this stage to sort of bring forth a visible reduction in this deficit that we're sitting at as a continent?
So a lot of it is really driven about what are the key sector growth priorities that each country has put forward. So that's why it's important for every government to have a clear 20-30-year development plan that actually gives insights not only to citizens but also to the private sector and DFIs around where the investment will go. So depending on where the critical need, you find that that's driven more by the prioritization of those areas. So if you look in terms of from a South Africa perspective, because we knew that we were reaching a capacity from ESCOM generation, that's why we pushed the renewable PPPs. If you look at other countries like Kenya, they were driving more in terms of increasing road infrastructure. You find other countries are looking more at healthcare and schools. So I think each country differs from that in terms of the requirement needs. But the important thing is having clarity around, if you've got a 20-30-year outlook, what are the top 5 priority sectors that government is driving, which then it's easier to then attract foreign investment into it, and also a DFI investment into from that perspective. So it all boils down to planning, having clear planning articulated, and also articulating which sectors are going to lead the economic growth and why, because then it's easier to participate. So I think it's challenging when those priorities aren't clearly defined or they keep changing. So one of the challenges we had in Africa, there's been quite a lot of elections in some of the key countries in Africa, so in Kenya, Somalia, and also we've had the oil sort of a downturn in Nigeria, which meant we saw quite a bit of a big slowdown in some of the big major projects from that perspective. We also had our own challenges in South Africa with constant government reshuffles, which then meant hard to see a project through or conversation through from that perspective. So I would say clear planning, articulating of the top priority sectors, but also then consistency and stability in leadership in that particular sector and growth, so that people can invest with certainty and continue conversations with people that they know.
And Lizeka, your view on the projects that we should be accelerating? You did express that the IDC, the bulk of interest comes from the renewable energy space, but should we be considering others?
We actually, I think from an IDC, we want a balanced approach. I agree. You have to have a plan. I think as a government, you have to maintain between social infrastructure versus economic infrastructure. Because if you want to grow and unlock industrial development, then the economic infrastructure is very key. But you also have to ensure you look after your citizens from a social infrastructure. As IDC, our approach now is obviously quite balanced. So we look after all forms of power. And this talks to the entire region. It's not purely South Africa. We look at logistics, because you can have power, but if you're not able to get to the market on time, you're really not as competitive, and therefore your jobs aren't sustainable. We also look at water. I think water is probably the biggest constraint we're seeing, and it's not what we're seeing in the Western Cape is probably the start of a bigger problem. So how do we become very proactive in ensuring that we partner, because we know as a country we're scarce on that resource, but how do we partner with our immediate border countries, and we partner with them, Lesotho, Mozambique, in ensuring that we actually get the resource that we need. So I don't think a government should really concentrate on one. You almost have to get a balancing approach, but as agreed, you have to have a plan. You have to make sure that you do not change, because that's another challenge. Infrastructure is long term. You put risk capital at times to actually develop a project up to bankability, and if you know that that risk capital will actually get returns over a longer term, you are able to commit. But if you invest today not knowing whether tomorrow water is going to be that priority sector, it now gets replaced by health, it doesn't really attract private sector investment. And policy, I think policy is very key. Certainty, people must know that I'm in it for the long haul.
In terms of private sector interest, as a private sector man, I mean, if government had to focus on maybe one or two of the infrastructure development projects right now that you think would be important for businesses like yourselves to grow and contribute better to the fiscus, what would they be? Well,
it's very interesting because in a 2016 report of PwC for construction in Africa, of the major projects and the mega projects, which is $50 billion and more, currently running in Africa, there's only 1.3% that's actually being spent on water. So the fact is that we've got a serious problem. The World Economic Forum states that in 20 years' time, Africa might have a larger young workforce than China and India combined. So saying that, and those people are all going to need massive increase in infrastructure. So basically, we're sitting with a major problem. We're spending 1.3% on water, mega projects, all over Africa. This is not like, say, not even, I think Cape Town is just the start of our problems. But we actually now sit in a position where we need to get a lot of these projects going in all the sectors to actually cater for 20 years down the line when we've got this massive workforce who needs jobs and who's going to demand jobs from the governments.
But then why is the private sector spending so little on water? And perhaps if I add something like education and also healthcare, why isn't there that much interest in these sectors or developing infrastructure in these sectors as there is in power?
Well, I think from the private sector, there's definitely interest in all of these projects. The problem is that, like my panelist said, is that there's a certain plan in place from the government. And I think, you know, at Inyatsi's side, we like to call it what we call the New Africa contract. We need to start building trust between the private and the public sector again, where we can start working together, because we might have the access to all the funding required from overseas, but the governments need to show us which projects take priority. We can then help them to actually get those projects off the ground and actually get the funding for these projects. But it's critical, I would say, right now, I would say water is probably one of our biggest issues, and obviously energy, water and energy.
I mean, if I may add, I think why private sector, you have not seen a huge increase in private sector participation. We've talked about the regulatory part of it, but I think lack of bankable projects as well. Some of these projects are so marginal that as a private investor, the returns are almost non-existent. Water is probably in South Africa one of those examples where I think all of us sitting here, we expected water to be a free resource. Now all of a sudden you need to pay for it. And the tariff structure has been so you could say anti-private sector, because government really provided that service. Now that government is constrained and also ensuring that we need to make this a commodity, we have to relook. When I say we, government, have to relook at the whole tariff structure. How do we change it so that we enable private sector to participate? So it's really around bankability, it's around funding models as well. And certainty, I think power, you could see, because we had a utility, you have a guaranteed cash flow, the PPA is sound, and therefore you are able to forecast your repayments over a longer term. It can be said on some forms of infrastructure. So it's really to get that balance. And innovation, hence I agree with him. Private sector and public have to sit around the table and say we all have one common goal. How do we do it? How do we make it work?
But are these conversations that are being had at government corners? And I ask particularly because of this water crisis that we're facing, but also in the healthcare space. I mean, I'm sure we've seen the hearings that are going into the Esidimeni tragedy taking place today. And then the issue of education. I mean, a lot of kids can't actually go to school because there aren't enough resources. So is making projects in these sectors more bankable a conversation that government is having and is hopefully starting to act on?
Look, so I think government is having those conversations. The challenge also always comes in that, as Lizica said, you got two types of infrastructure. So there's social, which generally are typical to monetize in terms of an offtake and pricing. So things like public service facilities like schools and hospitals. Difficult for you to monetize it because then you're having to provide a public service. Versus other economic infrastructure such as power, because you are able to sell that at a guaranteed price, whether it's an off-take price. Same thing as roads, which is why I think the government went in and put in toll roads, because you're able to monetize. So I think the study that needs to be done in each country is to analyze and say, which are the social infrastructure that government then provides the maximum funding to, which are the economically viable sort of sectors into which you can then attract more private investment, give more certain policy. I think the issue gets confused where you find government trying to participate also in economic infrastructure versus prioritizing social infrastructure. And then number two, I think a lot of the sort of public service, like for example, water in South Africa right now is not optimally priced. So it's actually seen as a basic human right.
Yeah.
So for you to
attract...
You
say it's cheap when you say it's not optimally priced?
In terms of and I think, sorry, just to close off, the big problem with water is that the challenge is not in building new infrastructure. It's maintaining existing infrastructure. That is the crisis that we're sitting on and people aren't realizing, in that we actually got an infrastructure of water that is creaking, not optimally sort of fixed and maintained. So investment in maintenance has been very much low from that perspective. So maintenance is an operating cost, difficult to get funding and funders for an operating type cost, versus building new infrastructure from that perspective.
No, for sure, because I mean, not only do we need these new projects, but we need the money to maintain and ensure day-to-day operations for these projects. So let's talk about the issue of funding in more detail. We know government's budget is very stretched, and it's not only in South Africa, I mean, across the continent. But against this backdrop, I mean, what are government looking at as potential alternatives or sources for funding?
And I think I'll answer your question, Fifi, but to illustrate or elaborate to the initial question you'd asked, which is probably similar to what you're asking now, whether government is having these conversations. They are having it. We're part of government as IDC. If we take the water issue in Western Cape, we were quite proactive before time and engaged government. And obviously one of the issues is the funding, but there's other issues as well. And as IDC, we preoccupied as to how can we make it work. We're not wanting to take over government's role. I don't think that's our mandate. But also I think we need to come up with a plan on helping or making it much more palatable to government to support the infrastructure programs. And one of the things we're grappling with is to how do we almost pre-fund, if I can call it that, government's infrastructure, and we get repaid over time. And to your question then, some of the ideas we're looking at is your project finance models of build, they operate, and we transfer. In that case, you really unlocking their balance sheets, and they're able to do the social infrastructure where they cannot actually attract private sector. And that's something that requires everybody, each and every stakeholder, to come around the table, because as IDC as well, that's not grant funding. We would need to understand certainty and the financial sustainability around it. But we are occupied. Hopefully we will find a solution. We could use one and we apply it to other opportunities.
I mean, this issue of blended finance and mobilizing blended finance, is this something that can strongly be applied in Africa's context?
Look, it definitely can, in Africa's and globally. And there's lots of conversations happening between private sector and government. If you look across Africa, there's a very good long list of projects that most countries have actually shaped and put together and thought about. I think the problem always comes in to say, is that project can you get it to a bankable feasibility? And that means that you need some work, and that's a lot of work that we as EY do, helping a lot of the governments do the pre-feasibility studies to actually shape and then model to then see how do you then get the project to a bankable stage where you can confirm the actual amount required to actually build a particular school is X, and the way that you're going to monetize it is Y, and then this is how long you would give the person to operate. I think for me, we're also seeing a big shift where government is now realizing that they cannot carry the whole value chain of infrastructure construction. Because I think that's been where the challenge government has, that they thought they could do it from conception to actual funding and actual build. They've now realized that you need to get participants along the way to actually help you get there. A lot of DFIs such as IDC and African Development Bank also then help in sometimes funding pre-feasibilities in certain infrastructure projects that they've prioritized to say, we believe to unlock economy of this country, for example, roads, therefore they start putting forward funding for the feasibility side. But in most countries you find that government can fund the feasibility but not the balance of it. Or there is a project wish list but no feasibility that's been done. Hard for you to have a conversation then with construction companies or even funders to say, this is how we can move the project forward. So I think for me, it's the bigger shift of actually government beginning to say, who can participate and help us along the value chain, what makes sense, and then in also in that sense, being able a lot more confident in allowing private sector for a while to build and operate the assets, so at least they can recoup the funding that they've put out before you actually give it back to government. But that requires quite a lot of legislation changes and shift to looking at saying, how do you enable private sector to own a government asset for a while and then give it back from that perspective?
I mean, yeah, so the issue of PPPs coming up there, and it goes without saying that, you know, this is one of the most ideal funding methods. But as a private sector man, I mean, how would you be encouraged to participate in such deals?
I think the fact is that that's where our business is going. That's where we are going to get our money eventually. We need to realize that we need to be relevant more in the markets that we work in. We need to start giving back. We need to realize that the time of just basically tendering on projects, that's over, because there's just too many construction companies. So if you want to survive, you have to start realizing that you have to work together with the government to actually make a difference. And that means that we will have to discuss different funding models with the funders, with the government, to get a midway where everybody is almost happy.
And then what could that potentially look like, particularly from a private investor perspective, that midway whereby I'm happy to give you my money? What will that look like?
I think we, from our company as well, is we're working on 1 or 2 projects in Swaziland and Zambia, where we exactly, basically we've already got the projects because that was we're bringing it forward. Now we're sitting with the government and the different funding models. Some of the projects are probably revision 10 or 12 already, because the funder has certain expectations. We take it back to the government. We sit together with the government, say, listen, the government cannot reach this. They are not able to pay this back, or they're not happy with these terms. We can then go back as the middleman to the funders and say, listen, this is how they can structure it. And it's amazing that every revision you get, you actually get closer to actually getting to a solution. And that again is the working together.
Sure.
You're not going to get that otherwise.
The unity that is being spoken about in this country. Lizeka?
What we're seeing as well, the South African construction companies, they obviously now looking at beyond South African borders. And they've realized that tendering obviously will not get them far, because they also compete with not just South Africans but also the East. So coming in early, which ordinarily they would not have done in their previous business model, is to provide your feasibility studies. They're now taking the risk, de-risking the projects, and they are able then to influence certain decisions. So we're seeing a change in mindset. Ordinarily they would not have. That's risky for them. They would want to get a tender, a contract, and implement. Now they're actually looking at it quite differently. And as the IDC, we're saying, let's partner with you, let de-risk, because once you've de-risked, you're able to actually call on other potential partners and funders as well. So that's another approach in which they are now looking at ways, and government, they appreciate, because for them, you've actually helped them to also optimize on their funding as well.
Sandile, perhaps just a parting comment on these PPPs, because I read somewhere, and perhaps you can enlighten me, that PPPs are not always beneficial for government, because they also apply further pressure on the fiscal or government spending pressures on that front. So how do we ensure that the PPPs that government does choose to enter into don't apply so much of pressure on their balance sheet?
So that's a good point. And I think the right is that PPPs are just purely a framework. And that framework can be enhanced or changed depending on suiting the needs. I think the big thing that sometimes governments need to look quite close at is that how much return on revenue would be required to be able to fund, to pay back that funding that you have borrowed. So that's why you've seen a lot of governments now beginning to issue government bonds and debt, because that's one way of raising capital onto the government's balance sheet to try and drive the growth. But more and more, I think we're seeing the example that Tommy was talking about, where you're getting the construction companies themselves willing to take on some of that debt, on that risk onto their balance sheet. So I think for me, it's that positive move now where you're saying the only way you can de-risk any PPP is if you share the funding risk between government, the funders, and the actual construction company. So whereas before you found construction companies just waiting for a fully funded tender to land the loan and then they just built, it's become quite obvious that those opportunities are very much limited unless you get that closer collaboration. And I think to expand on what Tom was saying, I think for me, there's a lot of engagement between construction companies and government. What I'd like to see more of is engagement between construction companies and DFIs such as IDC, because that is where you're going to get a lot more synergies in terms of, Tommy was talking about, you have to go back to the fund and say we need to change 1, 2, 3. But had you been walking the road, construction company and funder from day one, you could have come up with a funding model and package that you'd make it workable to the particular government. The second challenge then becomes a lot of these PPPs returns are based on forecasts. So you're focusing GDP and economic growth of a certain level number, north of 5%. If that drops below 5%, again, then it becomes unworkable, which means that government needs to then take on a lot more debt. So for me, it's really this collaboration of getting the funders and construction companies to upfront try and package a project that they then take to government, and in that way you find government a lot more receptive from that perspective.
No, for sure, because it has to be a collaborative effort. I mean, this is a very big problem that we're sitting on, and I don't think anyone is naive to think that this can be solved by one single party alone. We're going to hit pause on this discussion and go to a quick break. When we return, actually, we're going to discuss 1 or 2 other funding models that governments, businesses, and all stakeholders can actually use in addressing the infrastructure backlog that we are seeing here on the continent. We'll also get into a discussion about technology and what opportunities as well as challenges, potential challenges, this talk of the 4th industrial revolution will present for the infrastructure development here on the continent. Stay with us. Should we be having it next year, we could have more of a positive story to tell what we should do. Welcome back. Now we're going to continue our conversation about the future of long-term investing in infrastructure and development. And before we actually went to a quick break, we were looking at some of the funding models that could be used to address Africa's infrastructure backlog, which according to the African Development Bank sits at some $100 billion. Still with me in the studio for this conversation are Tommy Stridham, who's the CEO of Inyazi Construction, Sandile Hlophe, who is Africa Government and Public Sector Leader at EY, and Lizeka Machecha, who is the Divisional Executive of Infrastructure, Agro-Processing and Agriculture at the IDC. Thanks again for your time. So we have sieved through a couple of funding models already. I'd like to touch on the issue of developing our local debt markets. And Sandile, perhaps you can help me here. Global interest rates are really cheap, and for the longest of time we've seen African economies going to raise debt there in international markets. Problem is now that a lot of those markets are looking at tightening monetary policy, which could present a bit of a problem for us. There's a lot of conversations going on right now about the importance of developing our local debt market, not only for cost benefits, but also infrastructure, as we're having this conversation right now. But your view on African economies doing more to develop local debt markets so that they can raise capital for these projects at home?
Yeah, there's definitely quite a huge opportunity for growing local debt markets, particularly for infrastructure investment. If you look at, for a normal private investor, there's the only sort of form of investment you can do into infrastructure is typically long-term bonds and debt that are typically government or municipally issued. There's very few traded debt on the stock market like equities. So if you could have a lot more of locally traded debt that you are able to enter into and exit as and when required, that would facilitate more people participating. If you think about the average citizen, the only sort of investment you can do in terms of interest are fixed deposits on long term, but how about in linking those fixed deposits to infrastructure type projects, so that you start giving interest rate returns, not purely based on just interest rates, but also on performance and growth of the economy. So I think introducing some savings instruments that you are saving basically into infrastructure and with a bit of returns from that infrastructure in terms of how it's working, that is how you drive it. We saw a very fantastic evolving of property local market in terms of the REITs, which is the real estate trusts, whereby essentially they bundle up a whole bunch of properties, and then that property sort of company then gets listed, you trade on exchange. I think there's an opportunity to also introduce other infrastructure into that type of setup where you are bundling couple of roads, or maybe it's a power type of investments, and then you use that and then you float that company. So I think we have seen that real estate trusts have worked for raising property capital for property developers. I think it's an opportunity for us to then allow that also work for what we call other infrastructure that's economic. The big trick is making sure that the infrastructure can actually give you some return from a income perspective. So I think roads lend themselves perfectly to that scenario, and so does electricity.
Definitely, and even water, as in the case of the city of Cape Town, because they flighted their water bond on the JSE sometime last year, and there's been quite a bit of private and public sector interest in this. So infrastructure related bonds like this, as a private sector player, do you think they would continue to garner interest from the private sector?
I think it will definitely. The problem is, however, it will definitely, it's again to do with the risk. What is the stability, for instance, for the government that's bringing out that bond, or the municipality? So that it's all got to do with risk. And I think for a private investor, especially for a larger investor, that's going to be the key driver. So I do think is that the government now is, once they start bringing comfort to the investors, that will really go a long way to actually get people to actually invest in these bonds, definitely.
No, for sure. And Lizeka, speak to me about the PIC. I imagine as the IDC, you work very closely with the Public Investment Corporation, but are they interested enough, or are they doing enough in terms of investing in the infrastructure space to address the backlog?
I think they are. We partnered with them on a lot of renewable energy projects in South Africa. And I think also they did demonstrate the high-risk appetite, where we are co-shareholders in some of the concentrated solar power projects, which ordinarily that's a technology that's still up for evolution, further development and R&D. Also, we're seeing them a lot outside South Africa, so they again expanded their mandate. We've partnered with them on a power project in Mozambique. It's a gas power project. They're a shareholder, we're a debt holder. So we do partner. We actually have regular engagements just to understand the collaboration and opportunities that we could co-partner on. But as said earlier on, you need certainty on the underlying project. And I think in terms of the bond specifically, it was not really bonds, but we saw the emergence of a secondary market in the renewables. You saw a whole lot of pension funds coming in, Old Mutuals, Liberties, having an appetite. Ordinarily, they would not have had that appetite in an infrastructure, but because of a solid PPA understanding of the risk and the cash flow right up front, they are able to actually take advantage of that. So if another subsector can be packaged similarly to what happened in the renewables, you'll actually see a lot of them now coming in, having interest.
Sanjay, do you think from a South African context that our government right now is in a position to provide more certainty towards investors, particularly in this space, and particularly as our Deputy President and his delegation are selling the South Africa story to the world at the World Economic Forum? Are we in that position?
Look, I think with some of the recent changes in the ruling party and them taking a lot more action to focus more on providing certainty and also instituting investigations into sort of state captured, all that to clean up the market would help. If you look at South Africa, we've got a good track record in history in terms of being able to put forward an infrastructure type project, commit capital and certainty policy to make it work. We're able to sort of exhibit that in the 2010 World Cup build-up. The 5 years leading up to that, no African country have actually done that, and there was doubts around our ability to do it. We're able to put in place proper policy frameworks, be able to raise funding for that. Secondly, the whole renewable energy program as well is probably one of the largest renewable programs globally, where you'll be able to attract DFI and global funding into it. So I think in terms of enabling framework and experience, South Africa has got that. What's been missing, I think, over the last 5 to 10 years has been that economic and policy certainty around moving forward in those particular areas. There's been lots of talk over the last 10 years during budget speeches about how much money will be deployed into infrastructure spend. Construction companies, and Tommy can tell you, they've not seen any of that. It hasn't materialized, so everything got stuck in sort of bottlenecks and different priorities being put forward. So if you look at the intentions, as a country, we've had really great intentions around infrastructure development, but we've just, unfortunately, the past 10 years, we've lost our foot on that. But I think going forward, there's certain positive movements in that space. And as I say, our track record, 2010 World Cup, renewable energy programs, we've shown we can run these programs successfully. Just dipping back into funding models, if you look about infrastructure, it's long-term investing. And one of the best sort of matching type capital that is actually suited to infrastructure is typically your pension funds. And that's why you see the likes of PIC participating in a lot of these infrastructure projects, and that's why you saw a lot of insurance companies such as Liberty or Mutual coming in into the PPPs, where there was a long-term project plan, there was clarity around certainty of cash flows, able to participate. I think there's probably a gap in Africa, in South Africa in particular, where we have not yet leveraged fully all our pension funds capital to participate. A lot of it tends to go into listed equities, the top 10 thing, but a lot of that, there's very few stocks to participate. If you ask a lot of asset managers, they are looking for different homes to actually put the capital into. People typically work for 20, 30 years before they need the capital. A project takes 20 years to build. That provides fantastic matching for that. So there's been great studies over in the US, where a lot of the states and cities actually use state pensions to actually fund a lot of their infrastructure. And I think for me, that is the other area where we need to put some enabling framework that allows pension funds to participate a lot more in infrastructure projects.
Or maybe stricter instructions on their mandate. I mean, Lizaka, do you think that perhaps someone like the PIC should look more towards entities that are not necessarily listed, but that can have an impactful, or that can be impactful in the way of addressing the infrastructure backlog?
I think so, and I'm convinced they're probably looking at that, if already not implementing it. And I think PIC is the custodian through GPF of the civil servants' pensions. One of the examples, if you take the Brazil example, they use the equivalent of UIF for infrastructure and other industrial development opportunities. And I think South Africa has to take some of those lessons. We know our workers, as they said, they work for 20 to 30 years. How do we use the UIF contributions? IDC obviously does through PIC, partner using the UIF to make participation in terms of industrial development much more easier. But we need to expand on it. We need to make it much more broader. And I think honest conversations must happen around why is infrastructure important. And for me, I think you were asking whether government is taking this seriously, why is the construction companies not seeing it. And I think the message that hopefully will be presented at Davos is we will use infrastructure as a catalytic role to actually unlock the economic growth, because without that, really, you don't have an economy. So at times you have to take the risks upfront, but you know that the benefits you will actually seeing them over a longer term, and the IDC is there to play that counter-cyclical role to make sure that we are ready when the economy turns. You don't turn the economy, you don't have power.
Sure.
And that's the challenge.
And that's why also a united front becomes important in terms of showcasing in Davos. And it's great that we've got government and private sector working hand in hand to go position that message. Because the world knows that you need government and private sector to work together to unlock infrastructure.
So Tommy, Sandile addressed the issue of political stability here in South Africa, saying that the change in leadership at the ANC elective conference recently could possibly inspire a bit of confidence. Could you give us a perspective from the African or other African countries that you do operate in? I mean, what's the situation of policy certainty or political stability looking like there in, for instance, like Zambia?
Yeah, I think they've got the same problems as us, on different levels. You're asking about Zambia, but for instance, last year at the World Economic Forum in Durban, we spoke to the ex-Ghana president of Ghana, and their problem is completely different sometimes. They've got terrorism, those kind of things to come in there. So every country has its risks, and that is the key. That's a key problem that the investors have. They need to understand that risk. And if we as private sectors can go and explain the risk to them, and we can have the governments on our side working with us to go and explain the risks to the investors, there is a massive amount of private investment available for infrastructure. So Zambia is a key example. There's quite political stability at the moment, and the projects are slowly but surely. Yes, they're very dependent on the copper price, but if the copper price climbs, they are able to do the infrastructures. But in the end, it becomes that risk, and we have to work together with the governments to take that risk away, or to explain the risks to each of the investors going forward.
Sandile, at Davos, I imagine that Team South Africa will actually be speaking to a lot of foreign investors about why they should bring their dollars and euros and all their currencies here. But then how do you have that conversation in such a way that it is a win-win for all? It doesn't just pocket investors with healthy returns, but there also is a substantial changes that are seen and improvements that are seen for the citizens of the country, like here, South Africa.
Right. I mean, I think the really important thing, it links to what Tom was talking about earlier, is that every country needs to be open and transparent about their risks within their country, beyond the normal political and economic stuff, because if you don't articulate what risks are present within your country and economy, difficult for investors to understand and price that risk. Or they go and assume certain level of risk and price it inappropriately, which is why you start getting expensive debt and funding coming in. So the more adept countries become at articulating, this is what our investment risk looks like, this is what's happening in our country from that perspective. So I think for me, that's the good thing of having government and private sector going together, because the private sector can actually explain to say, we operate in South Africa, these are the risks that we are currently managing. And most of the time when you find that CEOs of global companies speaking to South African companies, they talk more around what is the operating environment, what are the daily risks that you as a business are managing in South Africa. Now, the minute you get a good articulation of that, it gives them a good sense on, okay, this is how I must think about investing in Africa or in South Africa from that perspective. So I think more and more countries are becoming quite adept at articulating what those risks are. You then partner that with an actual delegation of business people who will go and say, yes, in my enterprise-wide risk management strategy, these are the top 10 risks that I'm actually managing on a daily basis to be able to successful in South Africa.
Right, so the issue sometimes is also not because we don't have enough money for these projects. Sometimes we do have the money, but we don't use the money correctly, as we're seeing in many of our state-owned enterprises, Eskom being the one that comes to mind. Lizaka, how do we ensure, or are there systems in place currently that will better ensure that wasteful expenditure is not as big of a problem as it is currently?
Oh.
Loaded question.
It is a loaded question. I think as a start, it goes back to the plans, costing the projects. Therefore, you have to bring the experts to help you as government to understand what's that cost, to understand the risks. And you don't build something now and you were warned that actually you're coming very low because 2 to 3 years you have to pay double the price that you should have from day one estimated. So that's one. And I think the structures as well, if you take a project financed type of vehicle, you are able to understand everything, and you have, for example, your lender's technical advisors who are able to identify risks up front, whether you're going to face a cost overrun, how do you finance that. And I think governance is very important as well. Governance, that you have to have a solid board of directors that are able to assess all the risks up front, able to put up action plans where there are challenges. In any project, you will be faced with factors that you did not envisage. It's normal acts of gods. How do you have, is that properly structured and mitigated? Are the insurances in place? That's normal. But I think from our side as IDC, we think if corruption, for example, does not end, it actually takes away the right of ordinary citizens to further economic growth. So a lot of money could have been spent to create sustainable jobs. And I think with what's happening now, Team South Africa is going to paint a picture of a change and of a closer monitoring and obviously taking necessary consequences when needed, because some you can't avoid. It happens. Sure. It's in the ordinary course of business.
For sure. Yeah. And also, I mean, just going on to the private sector, because also there are also no angel when it comes to corruption themselves, as we've seen with the case right now. We're dealing with Steinhoff and the massive loss that has incurred to a lot of stakeholders. I speak to you particularly because the construction sector was also involved in some price fixing, bid rigging to the 2010 World Cup Stadia that you were talking about. I mean, Tommy, is this still a enticing, or has some of the punitive measures that the Competition Commission has put in place since then, including potential criminal charges for directors found to have engaged in such behavior, has that helped halt the temptation to, be corrupt with these very big infrastructure projects?
I think it definitely has. I think it woke everybody up. And in the end, we must realize that we can't run away from the collusion that happened. But in the end, we still produced world-class projects in that time. And I think we must build on, rather on the positive like that, we must build on that our companies in South Africa can compete any time with world-class companies. But it does mean that we need to become more responsible. We need to realize that instead of trying all those other things, we can work with the government. The governments have just indicated they want to work with us. That's why Team South Africa has private and public people going together, because we want to work together. So I do think it was a deterrent. But I think we now need to look forward, and we must take the positive. In any situation, there's always a positive. We must take that positive and realize that we can compete on a world-scale basis with everybody, and we just need to bring the infrastructure projects to the bank, that we can actually start those projects and actually start increasing and actually delivering these infrastructure projects.
For sure. As we start wrapping up, I'd like for us to discuss the jobs and the potential for job creation from these projects. Sure. Sandile, I mean, it's $100 billion, the infrastructure backlog. So the projects are very big themselves, a lot of capital needed from the onset to participate. I'd like to know, I mean, small businesses are often punted as being the solution to the unemployment crisis that we're sitting in right now. Yeah. But these projects are very big. I mean, do small businesses have a role in them?
They definitely do. If you look at the whole value chain of any construction, whether you're building a dam or a road and so forth, there's various inputs and sort of divisions required. The key thing is that the particular government entity or private company that's leading that particular project needs to be quite clear in terms of how do they, during the project life cycle, enable supply chain improvement in ACD from that perspective by ensuring that they put on particular requirements to the lead contractor around saying, you're provider of cement, you're provider of labor, make sure that you're participating in that space. And I think we've got a very great framework in the broad-based BEE codes, because, and also they've done lots of improvement around supply chain, enterprise development, and really a lot of that stuff will not happen unless the particular sponsor of that project is quite clear to the lead contractor to say, in delivering this 10-month project, we need to create and defer X number of jobs. We've seen very fantastic projects come out, especially during the 2010 World Cup. There were specific designations within the construction as to which jobs would go to emerging firms from that perspective. So generally, small enterprises are more attuned to creating more jobs because they grow quickly. Versus large corporates that have been around for a long while, there's certain limited employment. But in terms of small entities, that's where you find that sort of upswing coming in. But then more importantly, ensuring that we go back to basics. I think for me, the key thing we've probably missed out on in South Africa and Africa as well is going back to basics around governance and also segregation of duties. Because if you look at whether it's private or public sector, if you don't have a strong board of governance that actually holds the executive to account, where you're not leaving the executive now to almost be the board. Secondly, even within the executives having proper accountability and segregation of duties, I think those are the challenges that we're seeing both in private and public sector. I think for me as a country, we've lost sight of just the basics, saying apply governance appropriately, apply segregation of duties, and ensure that people are held to account. Because you can never prevent corruption anywhere unless you've got strong governance and proper segregation of duties.
For sure. Well, what about the issue of procurement and local procurement of some of these resources and building materials that will go into this? I mean, we've seen the steel industry fighting tooth and nail to ensure that government uses local steel for a lot of their projects. But the issue of procurement, will this be very important in addressing the infrastructure backlog? And is this something that government is taking seriously to procure locally rather than importing, even though sometimes it is cheaper to do so?
Government through Department of Trade and Industry have got designated components or inputs, steel, for example, or pipes. And I think as the IDC, when we support these large infrastructure projects, we actually stipulate. And for us, I think that's a non-negotiable because we need to create sustainable jobs back home. So government is aware. We've also, for the last 3 years, strengthened our relationships with the other state-owned entities, your Transnets, your ESCOM as IDC. So some of the companies we funded purely from that deliberate approach to actually source locally. I think localization, it's a word that someone was asking whether, what should Team South Africa say? In addition, it's almost say the rule, it's not a risk. It has to happen. And if you come and invest in South Africa, that's something you need to know from day one.
Sure.
And the question is, when I come and invest, how am I going to deliver on it? So I think as an IDC, it's something that is really non-negotiable. We do what we call an economic-wide impact assessment on a project to understand the entire value chain. Power, guys who's going to supply lime, that must be perhaps black, or SMME. So that's something as the IDC we preoccupied.
Women-owned?
Exactly. I think we're pushing more women. You saw the draft mining charter. As the IDC now, we're actually strategizing as to how do we implement. And we're quite proactive, engaging either existing entities. There's an opportunity to transform, also to ensure that we create jobs and keep them here.
But how quickly time goes. I'm told I've got 2 minutes and we haven't even touched on technology and the fourth industrial revolution and what this means. So I'm going to ask you now to quicken your thoughts and your statements. The fourth industrial revolution, opportunities or threats for infrastructure development on the continent?
I think a lot of opportunities. We need to realize that as technology grows, there's better means to control your waste on your projects if you look at a project to project. So it's critical that we invest in electronic formats and new technology, but it's critical that we up our energy infrastructure all over Africa. It doesn't help we go with new technology, we don't have any internet connectivity or those kind of things, and we need to look at it, not only in South Africa but all over Africa.
And how do we embrace the fourth IR without putting people out of work?
I think the important thing about the fourth industrial revolution is that technology actually complements human skills and human input. What technology allows us to do is to do things a lot more quicker and more efficiently. For example, you can now do 3D design on a computer, whereas before you needed to have a lot of people do it. But that means the project starts quicker. And then you've got more capital available to do the other bits of it. The second part is also ensuring that whenever you do projects, localization is key. Because unless you specify the local content, you're not going to create the jobs. So those are the two things that really go hand in hand from that side.
And Lizaka, is the South African government, African governments maybe in general, are we ready for the fourth industrial revolution? And how, or whose responsibility is it to make sure that our people are ready for it too?
I think it's the responsibility of both public and private sector. As IDC, obviously, we've partnered with our own ministry, as well as DTPS for telecoms, because that's an enabler. Without that, really, you can have power, but if you don't have the fiber and quite advanced technology, you aren't able to do that. And obviously the skills. So here is the DST, Department of Science and Technology, because you're going to need more higher quality skill, which I think will replace your lower. So again, what do you do with the lower? And those are some of the conversations. I think as the IDC this year, you will see us having that conversation, roundtable discussion. So I'm not at a point where we could say we are ready, but we are aware. We work very closely with WEF on understanding what does it mean. It might not, I went recently last year, it might not be the same as the advanced countries. It's how do you then make it work for the developing countries. So it's not going to be tomorrow you switch off, you don't have the lower skills. How do you make sure that we all coexist, but obviously advancing the development?
Well, we'll have to leave it there. Thank you so much for your insights. Thoroughly enjoyed them. And what is beautiful about the conversation on infrastructure development is the remarkable growth that African economies as a whole have experienced despite the infrastructure backlog. But this also speaks to the potential for further economic growth should we plug in the hole. At this stage, I'd like to thank my guests. That's Tommy Strydom, who's the CEO of Inyadzi Construction, Sandi Lehlope, who is Africa Government and Public Sector Leader at EY, and Lizeka Macheka, who is the Divisional Executive Infrastructure, Agro-Processing and Agriculture at the IDC. From the team here in Johannesburg, it's bye for now. Thank you so much for watching.